Hi, welcome to our illustration video of dollar value LIFO. Again, dollar value LIFO is one of the simplifying methods to reduce the cost of accounting under the LIFO cost flow assumption. In this example, Morris Company has one inventory pool, retaining wall stones. On December 31, 2024, Morris adopted the dollar value LIFO inventory method. Thus, the base year will be 2024. Inventory information is provided below. Okay, so what we're going to do here is we're going to go year by year by year. And each year you'll learn some new things, you'll reinforce some of the concepts, and you'll learn some new concepts. So let's focus on 2024 and then 2025. Won't take us very long to get through 2024 for reasons you'll see soon. All right. At the end of 2024, Morris had 100,000 retaining wall stones. Their cost was $2 per stone. So the dollar value of the inventory at the most recent unit cost at the end of 2024 was $200,000. And this is the base year. So now $2 per stone will be the base cost price level. All right. And our inventory inflation factor this year is 1. And so I put together a schedule that looks like this. Morris Company inventory schedule at December 31, 2024. The method is dollar value LIFO. The pool we're talking about is retaining wall stones, and the base year is 2024. And there you have units in ending inventory. Shucks, excuse my typo there. Units in ending inventory, 100,000 at the latest price of $2 per stone is a FIFO-based ending inventory balance of 200,000. And the inventory price inflation factor is 1. All right. And we're now off and rolling. That was inventory for 2024. That brings us to 2025. And so Morris Company has now done another year of business. And at the end of the year, there many stones have come in and many stones have gone out. But at the end of the year, they counted 110,000 stones in ending inventory. The latest cost that they paid their supplier was $2.10 a stone. So there's been a little bit of inflation in inventory acquisition prices. And so at $2.10 a stone, the FIFO inventory is $231,000. 210 times 110,000. And the inflation factor is 210 over $2 or 1.05. So what that means is the 2025 year cost level is 105% of the base year 2024. Thus, there's been 5% inflation in the inventory prices for retaining wall stones. All right. And our job now is to do the accounting and apply dollar value LIFO to determine the ending inventory under LIFO and any required LIFO reserve calculation. So at this point, look back, review your reading, and maybe review the case in the book and give 2025 a shot. All right, welcome back. I hope that went fairly well, but it's a difficult concept, so I understand if maybe you gave it a shot and said, oh, I think I'll watch the video for 2025 and then work 2026 and see if I do better, and that's fine. Yeah, that's called development. I would understand that. It's a tough concept. I'm sure most of the time you've paused my video and done quite well on your own. If that's not the case yet, it will be on this one, but I understand this is a rather difficult concept the first time you see it. It's also kind of nifty. All right, let's see what 2025 looks like. So, once again, sorry for the units. In ending inventory is 110,000 at the end of 2025. Remember, it was 100,000 at the end of 2024. So not only have prices gone up, but also the number in inventory has gone up at the end of this year versus the end of last year. The unit price is 210. If you multiply 110,000 times 210, you get 231,000, which is the FIFO-based ending inventory in dollars. We're using dollar value LIFO, though, at the company. The company is using dollar value LIFO, and the inflation factor is 105. All right, here we go. Step 1. Remember this? Reduce all units to the base year 2024 price level. All right. So that is the 110,000 times 210 is 231,000, and divided by 1.05, and now we have successfully deflated the 231,000 to as if the price for each brick was still $2 a stone, was still $2 a stone. 110,000 times 2 dividing by 1.05. All right, that reduces all units to base year price level. Step number 2, rebuild the inventory layers at base year, that's 2024 price levels. Okay, we could do that. Well, I know what the 2024 price year layer looked like. 2024 layer. And now the 2025 layer is right above. The 2025 incremental layer is $20,000. It's comprised of 10,000 more bricks and a difference in the 10,000 more bricks. And so inventory at the price at the base year price would be 220,000, which makes sense because there's 120,000 bricks and the base year price was $2. Step 3, convert all layers to price levels in that year. All right, I can do that. 2024, it was at the base year. 2025, the price level inflation factor is 1.05. So let's multiply that layer. And by the way, this layer comes from 220,000 minus 200,000 at end of 2024. So that was the addition, the addition to inventory in 2024 because we built it. All right. And so the base year layer remains at 200,000, but now we inflate the current year level to $21,000. And the LIFO based ending inventory is $221,000, which is 10,000 less than FIFO. Thus, our desired LIFO reserve is 10,000. LIFO based 231 minus FIFO based 221,000 is $10,000. If you looked in the LIFO reserve balance T account right now, which again is a contra asset, a contra inventory account, it has 0. So to get it to 10,000, we're going to credit it for 10,000. And remember, when we credit the LIFO reserve, we debit cost of goods sold plus expense minus asset plus a contra asset, however you want to put that. And congratulations, you have now applied dollar value LIFO for a year. Now at this point, pause the video again and attempt to do 2026. We've rolled the calendar forward 365 days. We've built a lot of retaining walls. And now it's time to count the inventory and prepare the financial statements. All right, good luck. All right, welcome back. I hope that went well. You're starting to reinforce the steps because now we're going to use the same steps every year. The steps to applying dollar value LIFO are the steps. And here's 2026. At the end of 2026, we learn that now we have built the inventory even further. It's up by 20,000 bricks to 130,000. And prices continue to escalate. They're now $230 a brick. So FIFO ending inventory is 299,000, and the inflation factor is 1.15. So we've had 15% inflation from 12/31/24 to 12/31/26, 15%. All right, now we do our steps again. There's 12/31/27. Oops, I'm sorry. Sorry. We're not into 27 yet. I apologize. All right, here's our schedule again. Morris Company inventory schedule, December 31, 2026. The method is dollar value LIFO. The pool is retaining wall stones, and the base year is 2 years ago, 2024. Units at the end in ending inventory are 130,000. The latest unit price level is 230, And so FIFO-based ending inventory is $299,000 with an inflation factor of 1.15. We spoke about that on the earlier, just a few moments ago. All right, let's follow our steps. Step 1, reduce all units to base year price levels. All right, you can do that. The inventory at current year price level is $299,000. The inflation factor for the inventory of retaining wall stones is 1.15. And so at base year, this would be a $260,000 inventory. Again, that makes sense. 130,000 stones times the $2 per stone was the base year price. 130 times 2 is 260,000. But the calculation is that 299,000 divided by 115. I'm just showing that the number makes sense when I say that it makes some sense to me because it was such round numbers. Well, 130,000 at base year level price 2 is 260,000. But here is where that 260,000 is coming from. In the real world, it wouldn't be so simple to do the math out of your head. That's why I use the simple numbers to build context. But this is very reflective of what the schedule will look like in the real world. It'll just have less round numbers. Step 2, build those inventory layers again at base year price level. There's 2024, there's 2025. You remember those numbers from the earlier schedule? Now we're going to add 2026. And the amount is 260,000 current at 2024 price levels minus 220,000 12/31/25. So inventory grew in dollar value by 40,000. The 2026 layer in dollars is 40,000, and we have a price at base year prices. We have inventory of 260,000. Of course, that's by mathematical design, because we were adding the 40,000 to this list. And then step 3, we convert to current price levels. In 2024 was the base year. Inflation factor relative to base year is 1, because it is the base year. Remember, 105 was the base year inflation factor in 2025, so that pumped up the 2025 layer at base year cost to 2025 layer at 12/31/25 level. And then 2026, we inflate it. 2026 layer is 46,000. And when you add those 3 up, you have your LIFO-based ending inventory. There's FIFO-based. There's LIFO-based. So the desired LIFO inventory is the $299,000. I'm sorry, I have a little error here. Copied rather than reviewing my work. Very bad. Be better than me in the real world. at reviewing your own work. So it is FIFO based. And LIFO based. And so we want 32,000. Remember what's in the what is in the T account as we speak was 10,000 from last year. And so we will need to add 32,000 to it. There's 10,000, and we credit it for 22,000 at 12/31/26 to get to 32,000, the desired balance at 12/31/26. There's your T account, your LIFO reserve T account. And we are done with the inventory accounting in 2026. And it's time to turn our attention to the last year in this illustration, 2027. Again, please pause the video and attempt 2027. You're going to